All right, Billy, let's bring in our next guest, Patrick Furlong. Patrick, how are you?
Hey, Chuck,
nice
I'm
to see
great.
you, bud.
My reach isn't quite as long as the last guest, but
Thank God. Okay, you're here to talk about reverse mortgages. And I'm glad you're here to talk about reverse mortgages because it's so confusing.
it is. You have a confused look on your face.
Yeah.
So you want me to tell you what they're all about?
Yeah, I want to learn about it.
Okay, great. First of all, what I want people to understand is that a reverse mortgage can help their money last longer and help them leave a larger estate for their family. And that's kind of what people our age, not your age and my age, but my age.
It leaves a larger estate for the family. I think people would think that wouldn't be the case. I think that they'd think that, oh no, mom and dad are going to spend all my inheritance on the reverse mortgage. Not the truth?
Well, you have to understand people's complete financial picture. So let's talk about that a little bit. So people our age, your mom's age and my age, have basically Social Security income, maybe some pension income, and then we have our retirement savings, and then we have our house. Now, a lot of people, in fact, most people, can't live just on their Social Security and their pension if they have a pension at all.
Well, they deserve to live better than that.
Yeah. So people have two options to get more money. They can either start taking the money out of their retirement funds, and every time you take money out of your retirement funds, you're not earning money on that money anymore. And you're also generally paying taxes because it's in a regular IRA or it's in a 401k. So you got to pay taxes on it.
Like income?
Income taxes, yeah.
Well, didn't you pay money on income tax on that money when you earned it the first time?
No. If it's in a 401k or in a regular Roth, that was all tax-free, tax-deductible. So you got the right to take it right off your taxes.
Wouldn't it have been better to pay the taxes on it at first and then at a lower rate than pay the higher taxes on it later?
The theory is that you're paying lower taxes on it later.
Okay.
Yeah, I mean, if you're someone making six figures, and you can take $20,000 off of $100,000, let's say, and not pay taxes on that $20,000, then you put it in a retirement fund, and it's growing at 7 or 8% a year tax free, and then you come back to start. You have to start taking it at 70 and a half. I'm not an expert on 401ks and IRAs, but I have them. Then you have to start paying income tax when you take it out. So the theory is if you're just drawing Social Security at $1,200 to maybe $3,000 a month, depending on how much you put in and the age that you took it, and maybe a small pension of $1,000 or $2,000 a month, that's a lot lower tax rate than $100,000.
Okay. Fair
so
enough.
all that money's growing. So here's the concept is people have this money in their retirement account and they have bills and they're trying to pay their bills with their Social Security and their pension, and they're having a hard time doing that, or they can't do it. Maybe they have a $1,500 a month house payment. They're taking $2,000 a month out of their retirement fund because they got to pay taxes on it to pay the $1,500 a month mortgage.
So it's better leave that money in there collecting the interest and reverse mortgage, take the money out of your house.
Bingo.
Okay, tell me how this works.
Okay, so let's take the case of, let's just use your mom as a hypothetical example. Let's say that she has a house that's worth $300,000 and she owes $100,000 on it. And she has been taking money out of her retirement funds to pay that mortgage. With a reverse mortgage, we can just pay that $100,000 off. She has no more payment. Now, the bank doesn't own your home. She still owns her home. The bank just puts a lien against the house just like any mortgage. If you buy a house or refinance a house...
So they put a $100,000 lien on your $300,000 home.
Right.
So there's $200,000 of equity sitting there, and mom doesn't have to make a payment on it any longer.
That's correct.
So in the event that mom passes and the house is sitting there, what happens then?
Well, the nice thing about a reverse mortgage compared to, let's just say she had a regular mortgage. If she had a regular mortgage, you or your siblings or whatever are going to have to keep making the payment on that house. and the bank's going to want you to sell it right away because you don't own it. Even if she gave it to you as in her will, you are not on the loan. So you either have to sell that house or you have to refinance it. You can't just start making payments on her loan. She's not on. You're not on that. So
I'm sure a lot of people do.
well, the bank knows when somebody passes away. That's why we have title companies and things like that. So the bank knows, and you're going to have to sell that house very quickly. They're not going to say, "Oh, Chuck, you have a year to pay it off." With a reverse mortgage, you do, and you're not having to make any payments during that period of time.
So with a reverse mortgage, it gives you time
Gives
to
you up
settle
to
the house.
Gives you up to a year, and during that period of time, you're not having to make a payment on the house. You have to make the property taxes, pay the property taxes and the insurance, and
So the family has a chance to buy it at the 200,000 or at the 300,000.
well, what's going to happen when the bank gives her $100,000? The interest is going to accrue, and the concept is just like if you took $100,000 down to Bank XYZ and bought a CD for 10 years at 5%. When you go back to get that CD, it's not going to be $100,000. It's going to be $130,000 or whatever it is. So the interest is accruing. So when you sell the house or refinance it, you're just going to refinance it for the $100,000 plus the accrued interest. There might be a few other things in there that are still owed, but that's basically the concept. Or if you sell it, the equity is yours, over and above what you owe in the bank. Now, the other nice thing about a reverse mortgage compared to a regular mortgage, or what we call a forward mortgage, is a forward mortgage is generally a recourse loan, meaning if you owe the bank more than the house is worth, they can come after you,
Right.
or they can come after the estate. With a reverse mortgage, it's a non-recourse loan, meaning if you owe more than the house is worth for some reason, that doesn't happen very often, but if we had another slide in home values and somebody was in that house a long, long time and a lot of interest accrued, that could happen. The bank can't come after you, can't come after the estate. So you just, there's times when the heirs just sign a deed in lieu over to the bank, and the bank has to deal with it.
Does the family get first shot at the house?
Yes, because normally the house is going to be in the estate.
Mm-hmm.
So whether your mom has a living will or however she has it set up, you can do whatever you want with the house. Sometime within that year, you've got to pay the bank back. Now keep in mind that during that year, interest is still accruing. So every month you're going to owe
The quicker you do it, the better.
Well, yes, within reason, because let's just say for some reason springtime's better than fall to sell a house, or when the kids go back to school or whatever it is. I'm not in residential real estate, but there's times when it's better to sell a house than not. When the demand's greater. Maybe it needs a little sprucing up, needs to be staged. Backyard needs to be weeded and gardened and stuff like that. So it gives you time, and most likely you're going to get better results when you have a little more time to think about it, and you're not under pressure to sell it, and you can't have to take the first offer that comes up because the bank's beating on you to get the money. And let's go back to your mom's situation again. So let's just say theoretically she has this $300,000 house, and we pay off her mortgage for $100,000. Now let's say that most people want to stay in their homes as they get older. So that's the nice thing about a reverse mortgage. That's exactly what it's designed to do, is to allow people to stay in their homes if they have enough equity. So let's say that your mom wanted to make her home more senior friendly. She wanted one of those new bathtubs, and she wanted some grab bars, and there were some areas in the home where there were some stairs she wanted to do some things with. And by the way, I'm also an aging in place specialist, so I can go into a house and look around and see what needs to be done to make it safe. And I just do that free for my customers. So we could give her more money to do those repairs. And again, it all depends on how much equity is in the house and her age. So we could also give her a monthly stipend for life. You know, maybe it's $300, maybe it's $500. It depends, again, on the equity in the home and the age of the person and what interest rates are at the time. We can also give her a line of credit. So let's just say we gave her the $100,000, gave her another $20,000 to repair the roof and put in the senior-friendly stuff that she wants to put in. But she's worried about later on having money to pay for in-home care or for another emergency to fix the house or something like that. So she can get a line of credit on top of that. So that it's so flexible and so, and that's what I like. I like being able to sit down and looking at people's different piles of money, and I work with financial planners and CPAs and estate attorneys. And I always tell people a reverse mortgage is an alternative. And there's alternative A, a reverse mortgage, alternative B, alternative C, alternative D. Which makes the most sense for you? You know, does it make more sense to take money out of the retirement account? Does it make more sense to sell the home and downsize? Does it make more sense to sell the home and move into an apartment? Does it make more sense to sell the home and move in with you?
She could do that anytime.
So it's not just for people that are in desperate straits. I mean, there are people that's all they have left is the equity in their home, but it's really a financial planning tool as much as anything.
Awesome. How do people get a hold of you, Pat?
They can get a hold of me at area code 559-213-7767.
You know, it was nice to hear the other side of it. I only hear what I see on the quick little TV commercials. It's nice to hear you lay it out.
Thanks,
Patrick
Chuck.
Furlong.
Yeah,
nice
thank you
to
very
see you,
much.
buddy. Hey, we're going to take a quick commercial break. We'll be right back. Stick around.